This is a tutorial on how to quickly draft a residential purchase agreement in 2024. There have been a series of changes and adjustments made to the form, so it's only fitting I do an updated tutorial. Now the form itself is sandwiched among all these advisories and disclosures. So I'm going to quickly skim through those because it's really just about putting your information and your client's information in these advisories. There's not much for me to explain. So we start with the agency relationship disclosure. Both you and your client are going to sign on page 1, nothing on page 2 of it. Fair housing, just your client on page 2 is going to sign. Possible representation of more than one buyer or seller. That's going to be both you and your client signing. Wire fraud advisory, just your client. Buyer's homeowner's insurance advisory, because there's been challenges with homeowner's insurance in California, as many of you know quite well. So buyer's going to sign that they acknowledge it. This is a newer form, by the way, that homeowner's insurance advisory. And finally, we arrive at the purchase agreement. Now, we start by putting the date we draft the form in the top left, the name of the buyer or buyers, the address, city, county, zip code, assessor's parcel number, which is like a social security number for a property. And you can find that on the MLS, on tax records like Realist, on a county tax assessor's website even. And if you really can't find it, you can leave it blank and come back to it later, but it's good for identification purposes. Down here, you're going to list the listing brokerage and the selling brokerage, now called seller's brokerage firm and buyer's brokerage firm. Now, I should have checked this box, so shame on me for missing it, but ABC Realty is the listing broker, so you'll check that box and put the license number, brokerage license number right there. And then the listing agent, you'll check that box representing the seller. Now, let's say it was a dual agent. You have the same brokerage would be listed here, the same agent names would be listed here, but you'd be checking this box. You'd be checking both buyer and seller's agent, dual agent. Pretty straightforward though, you're just filling out which brokerages and agents are involved and their license numbers. Now, we move on to the terms. Now, I'm telling you this how I would be drafting an offer. Should I be in a hurry and need to just draft a properly written offer up? This is how I would do it. So this, and I'll show you where you may have circumstances that might change it for your personal situation, but I'm just writing this from my perspective, just so you know. Now we start with a purchase price of $1 million even, just to make it a nice even number. If this were a cash offer, I'd check this box here, all cash, but we're not. We're pretending that we're putting 20% down. Our buyer's going to put 20% down, get a loan for 80%. So we're not checking all cash. For close of escrow, we are going to put 30 days because that's the most common. We check this box and write 30 days after acceptance. Now, you can check this box and write a definitive calendar date if you want, but I'm just, again, doing what's most common. Expiration, I would leave this alone. It expires 3 calendar days. Or if you want to shorten the timeline, you can put a date here, maybe tomorrow or the next day, and that will put a little more pressure on the seller to figure out what they want to do with your offer. Initial deposit amount, also called an EMD or earnest money deposit. This is typically between 1% and 3% of the sales price. Now I wrote in $30,000. So it automatically calculates this 3% number, which has caused all sorts of secondary problems because this isn't a binding term. They even wrote it in here because this was causing so many problems. Percent number above is for calculation purposes only, not a contractual term. So ignore that. That's just so you can have a frame of reference because I told you the standard EMD is between 1% and 3%. But generally speaking, you want to focus only on this number and ignore that. All right. By default, it's going to say that the buyer is going to wire the earnest money deposit. You could check this box and write check if you want. They could drop off a check to escrow. Increased deposit, very, very rarely used. This is if the buyer needs to sweeten the deal for some reason. They'll put that in here. We're going to skip it because that's very unlikely to be used when you write an offer. Now we get to loan amount down here. So I'm putting $800,000, which is 80% of the purchase price. And that's it. Quite frankly, I would leave it all alone. I wouldn't touch anything else on here. Now, I know that some people like to write in all this stuff, not to exceed some rate. My question is why? What's the point? I mean, if you have a loan contingency, you can cancel without having to put anything in here. So it doesn't matter. I mean, fill it out if you want, nothing wrong with it. But I'm telling you how I would write an offer if someone called me, and I don't want to sit at my desk for more than I have to, but I still want a properly written offer. Now, it's conventional by default. If it's not, if it's FHA or VA or something, you check these boxes. But that's how I'd write it up. Additional finance amount, maybe a secondary mortgage or something like that, you can put it down here. And if not, you'd leave it alone. Occupancy, by default, says owner occupied. And then they have the secondary or investment. All right, balance of purchase price is automatically calculated. That's your entire down payment. We're doing 80-20, right? 20% down, $200,000, but it deducts the EMD because the deposit is already in escrow. So that's how much the buyer's going to need to wire in, plus escrow fees. And then it should balance out. It should balance out automatically. These numbers are automatically generated. So if you did your math right, it should equal the purchase price down here. Both parties initial, and then we move on. Now, I wrote in a seller credit just so you'd see. Again, they have this calculation thing. It's highly annoying in my opinion, and to a point where they had to write this in because it caused so many problems. So I guess they just are adamant about you knowing what percentage numbers you put in. Like you couldn't figure it out on your own. Okay, sure. But I just wrote in 5,000. This is where you'd put a seller credit to the buyer. That's it. I would write it in just like that. It automatically generates this percentage and then move on. If there's any financing term that hasn't been mentioned above, you can go and write it in here. This is like an auxiliary space to put in whatever you want. Now they have this line in here. We're going to see more of this. This has to do with this Sitzer Burnett settlement and all these other lawsuits. It's unknown to the extent it'll change real estate agency, but what's up for some sort of change or transformation in the future is going to be agent commissions, namely the buyer's agent commission. So they have this whole thing in here. Now, how often does a seller agree to pay the buyer's broker? Not very often. So at first I was going to fill this thing out, but this form is just such an abstract and irregular form that it's very, very rarely, if ever, going to be used on transactions. So if you have a scenario where the seller is paying a buyer's agent, then you can write it in other terms. We can check this box and fill out the form, but I'm not going to include it in this tutorial because I just don't think it's very relevant. We'll see changes in the future. We'll see changes. I have all sorts of theories about how they're going to change the RP in the future. They're actually just waiting to see what happens because there are outstanding judgments that will shape this, but that's a separate topic. All right. Now, when you send an offer, you should send proof of funds for your down payment or the cash. You should send a bank statement or wherever your buyer has money that matches the buyer's name, not a statement that says like ABC Holdings Incorporated and your buyer's name is Jane Doe. That's no good. It needs to be the same name on the proof of funds, and that proof of funds needs to be enough to cover whatever is the cash purchase, or if it's not cash, in this case, we're putting $200,000 down. There should be at least $200,000 in an account that we are sending proof of funds with, along with the offer. But if it's not attached or you can't get it in time, you can always check this box and you have 3 days. Now, keep in mind, if the seller doesn't get it, if you don't send proof of funds and the loan qualification letter, then the seller can send a notice performed to your buyer and the seller can cancel unilaterally on the buyer. So just letting you know that you really should send your lender pre-approval and your proof of funds with the offer. That is proper form. You can send it a little bit late and check this box. That's why they put the 3 days in here. But if you can't get it to the seller, they can cancel. They'll send a notice to perform, and if you don't send it, they cancel. I would leave all this just how it is. I'm showing you exactly how I would leave the offer. So there's things like final verification of condition for the final walkthrough. I'd leave it. Assignment request. God forbid someone wants to assign the transaction. I don't even entertain that. I counter that out immediately. Assignments are just, they have just left a path of destruction. All right, contingencies. So loan, 17 days, I leave it alone. If it's cash, you can check this box, no loan contingency. Appraisal, I leave this alone. They put this box in here because in a situation where there's multiple offers, people want to put that a lower than purchase price appraisal value, meaning that you don't need your property to appraise the purchase price. It can appraise for less than the purchase price because you have a buyer that wants it so bad, they don't care if it appraises for less than what they're offering. That's what this means. It's rarely used. It's kind of a relic from the absolute pandemonium of multiple offers on every property that we saw before. But you'll leave it blank. Unless you're in some sort of crazy situation, you'll leave it blank right here. If it's cash, you check this box. Now, some finance buyers check this box because they don't care about the appraisal. They want it so bad, they don't care. It's not up to them. It's up to their lender. If they're getting a mortgage, you don't check this box. Do not. Do not. It's reckless. It's bad agency. It's shameful. Okay. Investigation, 17 days. 17 days for, this is all investigational right here. They just parsed it out into different aspects of investigation. But you have three contingencies. You have loan, appraisal, investigation. This is the inspection period. Buyer doing investigation. You can shorten these if you want to sweeten the deal for the seller. But I say just leave them all the same. Unless you really have to, leave them all the same. And then upon recording, buyer takes possession. Pretty straightforward. If there's a seller-occupied unit, check this box, do the appropriate form along with it. This is if the seller is staying in the property after close of escrow. If there's a tenant, check this box and fill out a TOPA. But that's not happening. So even though it looks blank, I left it blank on purpose. This is a fully written offer. Most of the time, you just leave all of this blank, unless one of these scenarios I'm describing applies to you. Again, I'd leave all these blank. These are measures that the seller must adhere to. Seller delivery of documents like seller disclosures. Installing smoke alarms, CO2 detectors, water heater bracing. Now, sometimes I see people waive this in their offer. You can't waive it. This is an obligation the state places upon the seller. The seller needs to make good on it. It's not up to the buyer to say, oh, I don't care. It's up to the buyer to comply with the law, the state law, to do it. That's it. And it's crazy for the seller not to, because a buyer can, if a seller tries waiving, or even if a buyer waives it and a seller doesn't do it, I mean, a seller could still be held liable for not being in compliance with state law. So don't mess with this. Both parties initial, we move on. All right. Items included. I mean, check everything that's included in the sale. Any personal items that should be included. Any affixed items. That's real property. Real being affixed, personal being movable. Real estate is immovable property. And so any affixed items convey. Some people don't get that when it comes to curtains or blinds. Those convey. But anyway, check boxes to limit ambiguity. That's what you want to do, is try to be as clear as possible so there's no misunderstanding. And if there's something that is personal property or seems out of the ordinary, put it right here. And if there's something that should stay but isn't, I moved. I had a chandelier I bought. I wanted to take it. So when I countered, I made sure that there was an excluded item that the chandelier was going, because the chandelier is affixed. It's a lighting fixture. It needs to stay. It's part of the real property. So those are the things you exclude, things that would otherwise stay. All right. NHD, natural hazard disclosure, required by the state of California. Seller almost always pays. Now, I do environmental too, because why not? It's like $20-something or more, and it tells you a lot more about the property. And then they have a drop-down menu. When you fill this form out online, there's a drop-down menu. And you don't have to choose one of those companies. You can write in whatever company you want. There's a drop-down menu, or you just write it in. I wrote in a company that's not on the drop-down menu. And here, this is new. This is for the wildfire report. And I did a whole YouTube video explaining everything about this. And I'll actually put a link to that video in the description. But most of the time, you don't need it. Now, if you're completely worried about wildfire risk and your NHD says you're in a high fire hazard zone, I mean, maybe get it. I mean, we managed for a long time without it. Your NHD is going to tell you when you're in a very high or even just a high fire hazard zone. So it's up to you, but I made a whole video about it. You can watch that if you want to learn more about the wildfire disclosure. All right. Some buyer's agents write in property inspection. You don't have to. I just wrote it in here just for fun, but it's absolutely pointless. I mean, the buyer has the inspection period of 17 days from up above. They can do whatever they want. They can bring in 5 different types of inspectors, a roof inspector, plumbing, whatever. I mean, they can have any sort of inspection they want. So, I mean, people write it in here, buyer pays for it. Great. It's completely innocuous, has zero effect. Seller. So what's interesting is up here, we have compliance. So seller is, we're going down here to who's paying for this sort of compliance. Seller should pay. I mean, if a buyer's paying, it needs to be done prior to the close of escrow. And buyers should not be paying to work on property they don't own yet. I've seen that go horribly wrong. This should be seller. Doesn't matter where in the state you are, because I know different parts of the state have different customs in terms of who pays what, but the seller should pay this. Now this is another area of contention. This is what I would do if I was filling this out. Now, the only counter argument I've seen to this, and there is merit to it, is that, well, what if my seller finds out that the corrective or remedial action costs $50,000 or something like that, and now they have made this commitment here? Fair point. So if you're concerned about this, leave it out, but hey, it's the seller's problem. I mean, the seller will not be able to sell to anyone because it says point of sale, government required point of sale, meaning required by the government law, point of sale, seller can't sell home unless this remedial action is done. So I check these boxes because I think, well, I don't care how much it costs the seller because the seller wants to sell. That's why it's listed, right? Well, it doesn't matter who they sell to. It's required either way. So I check these boxes, but I'm just telling you the counter argument because sometimes agents counter these out. They say remove or delete it from contract or remove from agreement. But if the property is going to sell, these are required and someone's got to pay for it. And again, like I said before with the CO2 detector and smoke alarm, no buyer should be paying for work to be done on a property they don't own yet. All right, escrow fee. Now in Southern California, we check both. Actually, we write each pay their own fees. You know what's funny is before this each pay their own fees existed years and years ago, everyone would write both. Now they have each pay their own fees, which actually is the same thing as both. But at any rate, so either of these will be just fine in Southern California. Now in Northern California, I know it's different. And I can link to the chart that I have a chart that shows, because there's even counties in Northern California where one part of the county, it's customarily done differently than another part of the county. I can link to the chart in the description. So check out the description for that link. We put in the escrow holder name. Title and escrow are usually the same in Northern California. In Southern California, they're usually different, which actually doesn't make sense, but I'm not going to go on a tangent on settlement. All right, so we're pretending that it's the same, or if it's not, you're going to write it here. If escrow and title are different, you write the name of the title company here. In Southern California, the seller pays owner's title policy. In Northern California, it's different. All of it's negotiable. I'm just telling you what's customary in different parts of the state. All right, Southern California, we check seller. We check seller. Not every city has a transfer tax. If you're unsure, check seller. All right? Because in Southern California, the seller pays, but not every city has it. HOA transfer, seller. Private transfer, those are rare, but actually, this is nice because they have seller by default. So now if there's another fee, or sometimes I see clever agents write in something like buyer's agent TC fee, and then they write buyer, and then the buyer has to pay for the transaction coordinator. So you can do whatever you want. These are just blank lines, auxiliary space for adding whatever you want. Home warranty, buyer chooses, which is good. Seller should pay. You should put in an amount not to exceed, and then the company that you want to furnish the home warranty plan. Now, what I do is there's a company that I typically use. They're all terrible, by the way. I mean, I've heard everyone complain about every company. There's no company that's this amazing premium company. It's which company is the least hassle, and I have one that I like to use, a big one. So what I do is I go to their website and I type in all this information about the property, and it tells me how much the warranty is going to cost. So I write it in here. I take a few minutes out of writing an offer. I go over to a website of a home warranty company. I type in the property. It gives me a number. I put it there. I write the name of the company. That's it. And you can even write buyer's choice here if you want to figure it out later. Just kick the can down the road. Write buyer's choice when it says issued by. Now, other terms, anything not mentioned above, write it in there. And then both parties initial at the bottom, and we move on. Now, that's most of it right there. Now, if there's part of it that, if there's something that is unusual or we haven't talked about yet, and it has to do with any of the terms you see here in these other forms, you'll check the appropriate box and it'll populate that form along with it and you'll include it. If it's a rural property, you'll check septic. I mean, things like that. Just so I would say skim through here very quickly and see if any of these pertain to you. That's it. And if they do, check the box, add the form, and move on. And we move through here. Now, all this ocean of text. Now remember, both parties are initialing at the bottom of every page. But all of these are provisions that state a course of action or remedy to take should something go wrong or should there be a question about one of the terms above. The way this whole offer is structured, I'll just show you very quickly. There's a grid, okay? And this is what we've been filling out, this grid or matrix, okay? And all of this relates to, and there's these codes on the side over here, all this relates to more text down here that gives an explanation or terms or recourse about what the implications are of the terms above. Like we already handled the appraisal above, right? I said waive it if it's cash. If not, 17 days. You can change it if you want. Well, maybe you have questions about appraisal. Here are the instructions. Here's the recourse. And what happens if one party doesn't do something? You'll go back to the offer. So many of the questions I answer as a buyer are, what does the text of the offer say as a remedy? What does it mean? What are the limitations? That's what all this is. That's what we're scrolling through. It's important. You can read it. You can skim it, but there's nothing you need to do with it right now. That's it. It's there. So you have it when you need it. And both parties are initialing. What page are we on now? We are on 8 of 16. My gosh, this thing just gets longer and longer every year. Okay, so both parties are initialing. Look at all this. Oh my gosh. All right, time periods, notices to perform, buyer right to cancel, demand to close escrow. I mean, this is basically like this is like a reference book for me as a broker, because when I'm dealing with issues that arise from a transaction, I'm going back to this and I'm saying, okay, well, right here we have this certain line that says exactly which party's responsible and what the remedy is. That's what all this is. All right. Oh my gosh. Okay, 12 of 16. All right. Okay, now here's the next part where you have to do something. We are on page 14 of 16. Both parties initial here. This is about the liquidated damages if a buyer breaches their EMDs on the line, their earnest money deposits on the line. Sometimes buyers get sneaky and they try to not initial here, but a wise seller or listing agent will quickly ask that the buyer initial or else no deal. Now, there's also an arbitration area. Now, both parties do not have to initial here. This just says first course of resolution dispute is mediation. If that doesn't work, it escalates to arbitration. And the parties initialing here are saying, yeah, we agree to that to avoid litigation. But they don't have to. They can just sign this at the bottom. Sometimes I see people not sign the arbitration clause because they'd rather just go right to court if they can't mediate a resolution. But most transactions, both parties initial here. Most transactions, page 14 of 16, has 3 sets of initials, all initialed. Okay, if the buyer's an entity, like if you're representing an LLC or a corporation or a trust or something, you can check this box and write the name of the signer, because the name of the corporation isn't the officer. That's not the name that you're using as the buyer. The name of the buyer is going to be the entity. That's it. So if XYZ Home Investors is buying, that's the name of the buyer, but you can't sign XYZ Home Investors. And I see these mistakes. Even if this sounds obvious to you, I see this all the time. I see people sign cursive the name of a company, and I'm saying, you can't do that. You can't. There's no such thing. There must be a human that signs for an entity, and that human's name is an authorized signer. And that's why it's saying here, this is the legally authorized signer. So if it's ABC Home Investors, Inc., that's the name of the buyer, but the authorized signer is here. So the buyer might be written out as a corporation or trust or LLC, but the signature is going to say the name of an individual. Now, when you get down to acceptance, so the buyer signs here. That's it. The buyer signs here and to ship it off. When the seller accepts, though, they need to check this box if they counter. And if the buyer counters, the buyer is going to, on the buyer counter offer, has a checkbox. This makes the offer subject to the counter. If there's no counter, ignore it. The seller will just sign here. Now, quick side note. A listing agent or a seller's agent must present all offers, unless their client refuses in writing to the listing agent, hey, do not give me any more offers to review, okay? I'm just telling you because your offer needs to be presented, but they don't have to respond to your offer, okay? They don't have to respond to your offer. You can submit an offer. I'm bringing this up now because we're looking at offer not accepted. Now, what happens if a listing agent ghosts you? Well, if enough time passes, you can reach out to the seller directly. But before that happens, as a buyer's agent, you should contact the listing agent and their broker before you try to circumvent them and go to their client. Because if you have a paper trail of you trying to contact the representatives at the listing brokerage and everyone's ignoring you, and you then talk to the seller, you won't get in trouble as long as you've let a certain amount of time pass. I'd say at least 24 hours from your last attempt to make contact with the listing brokerage. All right, I'm going too far on a tangent here. All right, so then this is where you're going to sign as a real estate agent. You're going to sign here, and the listing agent is going to sign down here, and eventually escrow is going to put their info here, and both parties are going to initial once all this is filled out. And we have more advisories because it's a sandwich. And on the other side of this of the RPA sandwich are more advisories and disclosures. So we have a buyer investigation advisory. And guess what? Your buyer's just going to sign it and you're done. That's it. Then we have a Fair Appraisal Act addendum. And your buyer's going to sign that. And then we have a California Consumer Privacy Act advisory, disclosure, and notice. And your buyer's going to sign that. Oh, this populated the seller's payment to buyer's broker. This is what happens if you check those boxes. It populates forms at the end of it. But this is the last form in the bundle. If you have any questions, please leave a comment. Thank you for watching.